Hi guys, and welcome to the first session of Certificate Investment Banking Operations. And we are currently in the Investment Banking Foundation module, wherein considering that a lot of students might be coming from various backgrounds which might not be aware of such terminologies. In fact, people even coming from commerce backgrounds might not be aware of a lot of these terminologies. So this will be your first section in which we'll be discussing about the various commonly used trading terminologies, so that we get used to listening to these words time and again as we progress through advanced contents, right? So let's start with first understanding what are the learning outcomes. So as you can see out here, our first and foremost, we're going to understand the basic terminologies commonly used, and this will be common across any country that we are actually referring to. Then we look at understanding various methods of exchange of securities. Finally, getting into how the recording of details of trades. So, what are the various details which are actually captured in a trade, and then try to understand the actual trade order case study, which you can practice so that you understand this concept better, right? So, let's get started with the first slide, in which let's try to first get this through in our mind. How does the marketplace look like right now? When we try to imagine marketplace, generally we think about an exchange and a broker. Well, that's mostly right, except for the fact that when we're talking about a higher scale of transactions, when we're talking about many types of mutual funds, hedge funds, so many types of institutional investors, things tend to become a little more complicated than that, right? So let's try to refer to this diagram, and you can see out here that we are talking about an investment firm here, okay? So the investment firm can be different kinds. It's just not mutual fund, it is just not hedge fund. There are so many types of ways of accumulating capital and then investing, right? So in India, we are obviously more accustomed to hearing the mutual fund, but when you go to the US, you also have hedge funds, pension funds, endowment funds, foundations. So this is the owner of the capital. Okay, so they own the capital. Now, when they're transacting, so they have done their set of analysis. They know what exactly to buy, what not to buy. So they have an executing broker. Okay, so they do not, obviously they are not members of exchange themselves. So they have an executing broker, right? Now, after the executing broker, you also have a clearing broker. Okay, and along with that, in the same section of trading this, you also have the exchanges. This is where the stocks are, or the securities are listed. Okay, so this is the middleman, right? So this is the guy who will make sure that we get whatever we want to purchase at whatever price we want to purchase, right? Now now this is where the stocks are listed, right? And let's say we are purchasing from a counterparty. So let's say there's a counterparty here. Okay, and you will hear this term many times as we progress through this course, counterparty. So whenever I say counterparty, try to understand that this is the person who has the stocks from whom I want to buy, right? So let's say the position. Okay, so again, frequently we will say position when we are trying to say, okay, I want to buy. Okay, so let's say I want to buy or sell. But in this case, let's say we want to buy a security. Okay, and let's say we want to buy Apple stock. Okay, so the investment firm has decided that it wants to buy this Apple stock. So it approaches its executing broker, and it tells him that, okay, I want to buy AAPL. Okay, at, let's say, I'm giving you a hypothetical price. So let's say I want to buy at 350, and the quantity is, let's say, about 10,000 shares. Okay, now, the executing broker would have different other brokers along with it, who would try to find whether such a trade is possible, right? They will try to find out a counter broker who would have the security and is willing to sell at 350, right? Now, this is where it becomes interesting, right? Now, let's say the clearing broker comes back to the executing broker and says that, okay, we have the security at 350, and let's the counterparty is ready to sell it, right? Now, at the same moment, once the order is placed, the order also goes to the exchange, right? So the exchange also is notified. The counterparty custodian is also notified, right? And your current custodian is also notified. So you can see that things are becoming a little more complicated, right? And things become more complicated because the investment firm, right, is not in the process of execution, right? The broker, the custodian, the exchange is the one who is actually executing the trade. So which makes things a little more complicated from the perspective that we need to be sure that this is what the investment firm actually wants, right? So you also have systems like DTC, right, which are basically a trade approval management system, so that the exchange, the custodian, the middleman, and the investment firm all are in one page in understanding that okay, this is the trade that we want, right? Now the similar structure. Now I'm obviously not going to take you through the entire trade cycle in this class because we're just trying to understand at the basic level what exactly is going on, right? So at the moment you need to understand that okay, this is the executing party, this is the person who has the funds. Custodian is where the securities, I mean, for example, this guy might be having the Apple stock because of which I'm able to buy that Apple stock, right? So this custodian, let's say the custodian is Axis Bank. So custodian means nothing but a kind of a bank which stores your securities in a digital format safely, okay, and also ensures that the process is followed, right? So and similarly, let's say we have another custodian, Yes Bank, which is our custodian, right? So once everything goes according to plan, then this security will transfer hands into this custodian, and in return cash will be paid to the other custodian. So this is how the entire market participants structure looks like. Okay, so let's move forward. So what are we trying to learn here? Okay, so basically any broker. So right now we were talking about a broker. So broker is nothing but a securities trading organization. In India, we just know by the term broker because in India generally you will see institutional level investments are limited to maybe publicly limited companies, publicly government entities, or maybe max to max it will be mutual funds, right? So in the US we call this organization as a security trading organization because they do much more than just trying to execute trades. They provide a lot of back end middle office operations also to the client. Okay, we are trying to learn the various positions of buy or sell, right? Because this is very important, and we also are trying to understand what are the trade details that are captured in the process of institutional banking operations. We're not talking about retail banking. Retail operations are very simple, it's not that difficult to understand, right? So the idea is, why this banking operations field is only there, right? The reason why it is because we have to maintain a lot of data. So, for example, once I place the order of Apple at $500 and the quantity is, let's say, 10,000, right? Now, this is my order given to the front office, right? The front office guy. So that front office guy will now speak to the dealer, right? So now we can see that this is the order. Okay. Also, we need to specify the currency, right? So, for example, if the client is not in US and let's say the client is in India, so there is a currency conversion which has to happen, right? Then the dealer will come back and say that okay, no, this is not possible. So maybe the deal is possible at port 505, right? So let's say 505, and we can only fulfill, let's say, quantity of 7,000. So there is a partial order fulfillment possibility, right? Now these details has to be captured. Now second is you also need to capture the counterparty, right? Because unlike retail wherein you are most likely you do not face any counterparty, in this case when you're talking about institutional level trading, we also know the counterparty, right? Then we also need to ensure that the trade happens on time. We also need to ensure that the settlement happens on time, which basically means that I actually get the security, right? And there are regulations which I have to follow. If I don't settle the trade within a certain stipulated time, then I also am faced with a lot of penalty which I have to pay, right? So there is a reason why. This is the reason basically why, in order to avoid big chaos happening, we have to maintain records. Okay. Let's try to understand, in a more simplified example of why it is important that you maintain records. Right? For example, Rahul and company bought 100 shoes. Okay, so they have an inventory of 100 shoes at 1,000 each from Sohan Lal Shoes Company. So there's the counterparty is Sohan Lal Shoes Company, right? Shoes Company, right? So total due to pay is 1 lakh, right? So Rahul and company needs to pay 10,000, 1 lakh, right? And similarly, Sohan and company, right, need to deliver back 100 shoes, right, at 1,000, right? So that's the deal, right? So let's say we captured the detail out here. So we captured the trade detail is 1st of June. So that's the trade date. What are we trying to do? We're trying to buy shoes. What are the quantity of shoes? What are we buying? Right? What is the price that we are getting? Who's the supplier? What is the delivery date? And what is the cash due? So you can see that delivery date is nothing but in trading terminology is also called as settlement date. So that means you will get what you ordered, right? Uh, Similarly, you can see this is the purchase price, right? This is the trading quantity, right? Right. And this is the trade date. So this is the date when you actually execute it. Okay. Now, after that buying has happened, so STO buys the 100. So one more example out here: STO buys 100 Reliance shares at rupees 2,500 from a counterparty A on 1st June 2022 for delivery on 4th June 2022. Total due is 25,000. So similarly, if you just put in the values out here, similar details, but the only thing is instead of shoes, it's Reliance shares, right? So that's the basics of trading details which are captured. Now, the important terminologies at this stage of the course is to understand what we are talking about. We are talking about everything from the perspective of the security trading organization, or in simple words, we're talking also about a large broker, right? So Goldman Sachs would be called as a securities trading organization. JP Morgan would be called as a security trading organization, right? So all of these are security trading organizations which obviously manage their own money also, but at the same time they also manage their or help their clients execute trades on behalf of them, right? Now, security, talking about securities, we always don't mean stocks, we also mean bonds, right? We can also have currencies, we can have stocks, we can have treasury securities, right? Short term bonds basically, right? Counterparty means anyone. I mean, if we are the buyer, then the counterparty is the seller, right? If we are the seller, the counterparty is the buyer, right? And also later on, you will realize complications in trading operations when we also lend and borrow securities, right? So in those cases, we also call them as lender and borrower, right? Value date is the settlement date. Don't ever get confused between this. Basically the date on which we get the security. Okay. So when we are doing retail trades, it automatically comes into our account on T+2, right? India, by the way, is going into T+1, and a lot of companies around the world are going into T+1, right? Custodians are local agents who actually hold your security on your behalf, right? So the security trading organization can also be a custodian, but most likely they don't do that because being a custodian is not easy because it requires a large, big infrastructure on that and a strong understanding of regulations and policies. So generally, security trading organizations are not custodians, but they may offer custodian services for select clients. Because there might be some clients who might say that we want a security trading organization which also is a custodian, right? So custodian is nothing but, you can say, a safekeeper of your securities, right? uh, the whole idea of making this entire process of back office operations, middle office operations, is to be in control. Okay, you have to understand it's a rippling effect. Okay, one guy, one mistake will create 100 more mistakes, right? So at any given time, let's say I am a Goldman Sachs trader, right? And let's say I want to, let's say my operations are not in control, and let's say I go up and say that okay, I'm going to buy, let's say U.S. Treasury bonds, okay, or let's say I will sell U.S. Treasury bonds on the borrowing mode for 3 days. Now, if my operations are not in place, and I am under the impression that yes, I have the US Treasury bond wherein I actually don't have, then what is going to happen? So you're going to make fake promises in the market, and then again you will have to face a lot of penalty, right? So that's the reason why such huge level operations are created in this you know in this field, right? Consequences. So as I was saying, right, no certainty of its trading position. You don't know whether you are in profit or loss, right? Can happen, right? If your trading operations are not happening, quickly and on time, very less chance of knowing what your cash position is, right? It can open you to a lot of risk. If you remember, in 2007, right, a lot of big companies like Goldman Sachs and JP Morgan, big names, didn't know their risk situation, right? Because first of all, they could not understand their own securities that they had invested in, and they had large, exposure to these credit default swaps, which eventually some analysts found out, which they actually should have known on real time basis, right? Now, of course, the processes have evolved a lot, and now the at real time basis, a security trading organization is able to understand what their risk position is, right? No idea of the exact quantity of securities that you have. As I was saying, right, I commit that okay, I'm going to lend you a security, but I don't know whether it's actually there, right? And legal compliances, because when you are a security trading organization, you will obviously be frequently audited. You will have to comply, right? And you'll have to face penalties if you're not complying, right? So that is the reason why you have so many jobs in middle office and back office risk management in India, because in the US, if you understand trying to implement this level of operations, right, will be very costly, right? And hence, good for India, we get a lot of jobs in return, right? So that's the end of the first session, I would say. Nothing much to take away from the basic stuff, and we're just getting started. So let's catch up again in the next session.